The Norwegian Sovereign Wealth Fund is the largest fund in the world and owns 1.5% of all stocks worldwide. Today, we'll take a close look at its performance of more than 15% over the past year, and how you can easily replicate this sovereign wealth fund yourself using ETFs. And with that, welcome to Northern Finance. My name is Alex Bleck.
Hi, my name is Alex from Northern Finance. This video was translated with the help of AI so that we can reach more people in their own language. A native speaker has reviewed the translation. Still, some sentences might sound a little unusual. Thanks for being here and enjoy the video now.
Yes, the Norwegian Sovereign Wealth Fund published its latest annual report for 2025 last week, and it's extremely exciting. I really enjoy reading annual reports, and there's a lot in here that we as investors can learn from. As you can see right on page 3, the fund delivered a 15.1% return for Norwegians in 2025 for their retirement savings, which was just below its benchmark index, but still a top result. Stocks delivered 19.3%, fixed income bonds were at 5.4%, not publicly traded real estate contributed a 4.4% return. And what I find most exciting are the unlisted investments in renewable energy, which delivered an 18.1% return. Really impressive, but more on that later. Stocks make up 71% of the entire fund. Some would say that's a relatively high equity ratio. I think it's a good ratio, and you could even increase it a bit more. And bonds are at 26%, and not publicly listed real estate and renewable energy investments together make up 2.1%, representing the smallest investment categories here. If you want to look up anything yourself that we show here in the video, I've left the link to the annual report down below in the video description. Let's take a close look at the most important developments, the return drivers and the return killers. And after that, we'll discuss how you can easily replicate the portfolio with ETFs, plus how you can also represent the non-listed investments in renewable energies. I find page 7 very interesting, because Table 4 shows that the average return of the Norwegian Sovereign Wealth Fund since its inception in 1998 is 6.64%. That's 0.74% more return per year than in 2020 when we published our first video about the Norwegian Sovereign Wealth Fund here at Northern Finance. And it's a nice development to see that things have gone so much better in recent years. That's a big difference and simply shows how strong the last few years have been overall. Here in chart 2, you can also see the annual returns displayed as a bar chart, and you can clearly see that the returns have been very positive in most years. And the more years go by, the less this blue line fluctuates, which here shows the average return. Whereas in 2002, after the dot-com bubble burst, the return was still clearly negative. Here with the Sovereign Wealth Fund, the average return also dropped sharply, but in the 2022 crash, this was hardly the case anymore, even though the loss that year was much greater. For those who invest for the long term, even bad years don't matter much. The current largest stocks in the portfolio are as follows: Nvidia, Apple, Microsoft, Alphabet, Amazon, TSMC, Broadcom, Tesla, and Eli Lilly. These are also the largest publicly listed companies in the world, and this fund alone owns more than 1% of each company. For Nvidia, the share is 1.26%. This entire stock package is currently worth more than $56 billion. And that's just in this one stock, invested in a single stock. This shows how large this sovereign wealth fund has really become over the years and decades, and how successful as well. I have to say, you do get a bit envious of the Norwegians when I look at our pension system, which is simply based on redistribution, from the young to the old, without any investment being made here. In Table 6 of the annual report, we can also see that markets outside the USA, especially China, Switzerland, Taiwan, and Canada, delivered the highest returns last year. What's interesting for all ETF investors is that the USA is significantly underweighted at 54.7%. In comparison to an MSCI World, for example, where the USA currently makes up 71%. Japan is represented about equally, while European countries like the United Kingdom and Germany are overweighted in the Sovereign Wealth Fund. Interestingly, the Sovereign Wealth Fund also underweights emerging markets. China, as the world's second largest economy, accounts for just 4.9% of all equity investments here, which in my opinion could turn out to be a mistake in the long run, but maybe I'm wrong. If you invest in the MSCI emerging markets, China makes up 26% there. And in my view, Taiwan is also underweighted in the Sovereign Wealth Fund. Here, only 2.7% is invested compared to the emerging markets ETF. Taiwan accounts for 21%, so really significantly more. The same applies to Indian stocks, which are also underweighted. And interestingly, the sector allocation in Table 7 is very, very similar to that in the MSCI World. Yes, I really didn't expect that. ETFs stocks are at the very top, followed by financial institutions, consumer goods, and industrials. When it comes to bonds, most of the money is invested in government bonds, which yielded 4.1% last year, and contributed the least here. Interestingly, bonds linked to governments delivered almost double the return here. As can be seen in the footnote below, the fund defines these as cases where a government issues a bond in a foreign currency. For example, in 2025, Finland issued bonds in US dollars to diversify its financing by the government. Denmark did the same last year, and this is also where investments are made. A quarter is then held in corporate bonds, which yielded 6.6% last year. Furthermore, investments are also made in inflation-linked bonds and secured bonds, which generated the highest returns here. It's also interesting that graphic 11 shows how, since 2020, the share of bonds in the portfolio has been steadily increasing and has even doubled since then. When it comes to real estate, the fund invests a bit more directly in entire properties, which the fund then fully owns. An example of this can be found on page 32, the so-called America's Tower in New York, which the fund has acquired here. And around half of the real estate investments go into office buildings, which are struggling with the trend toward more and more working from home. Nevertheless, new money continues to be invested here. The fund itself says that prices for offices and retail spaces have stabilized again, but significantly more money is flowing into new sectors like data centers. A maximum of 7% of the fund may be invested in real estate. And according to Table 11, the fund achieved this last year. A rental yield of 4.4%, which is slightly more than the average of 4% here. You can also see the sector and country allocation here in charts 15 and 16. If you want to read through this, feel free to hit pause, and as you can see in chart 17, quite a bit is still happening. New money is being invested here compared to previous years. Slightly less than 50% of the real estate portfolio is currently made up of exchange-traded stocks, such as REITs. 1.4% of the entire fund is invested in this way. You can see the largest stocks here in the table, 14, shown here with the fund owning 9 to 25% of each of these companies. And with that, we come to the last investment category before we get to the ETFs, and how you can replicate the sovereign wealth fund with these. The last investment category is non-listed investments in renewable energy infrastructure. The title is a bit complicated, but here they achieved an 18.1% return last year. With just 0.4% of the portfolio, the investment here is relatively weak, as can be seen on page 36. What's interesting, though, is that just below it, the Norwegian Sovereign Wealth Fund itself says that in the early years they invested very little in this asset category, but have now significantly increased their allocation. Because you can now make more money with renewable energies than before. I find that very interesting. Specifically, last year they bought 2 offshore wind projects from RWE in Denmark and Germany. And they invested in the German electricity transmission network by purchasing shares of TenneT, which operates the transmission grids here in central Germany, shown here in this greenish tone. As can be seen here on the website, a total of $5.9 billion is currently invested in renewable energy. Here, investments are also made through 2 funds. Otherwise, the fund itself usually acquires a minority stake of 49% in large individual projects in the wind and photovoltaic sectors. Here in Table 17, you can see the exact breakdown by percentage into these different year categories. And the question now, of course, is things are going pretty well for the Norwegians, so how can you actually replicate this in your own portfolio? There are very few ETFs for renewable energies, and even fewer good ones. One option is the well-known iShares Clean Energy Transition ETF, which is still in the red since its launch in 2008. Even over a 5-year period, it has delivered a loss. So you really need to be careful when selecting ETFs. Even though it shows a strong gain over the last 12 months, it simply hasn't been a very good ETF historically. Personally, I prefer my investment in Ventus Energy, where I also invest in renewable energy projects, but in their debt. And here I receive a fixed interest rate of 16% per year plus cashback. And I also have the option of an early exit, allowing me to withdraw quickly if I want to. I currently have 15,000 euros invested here, and in reality my return is even 22%, as I showed in the test video here last week. I've also left the link to the video and to Ventus itself for you below in the video description. Plus, get a bonus upon registration you won't get elsewhere. Now for the exciting part, how to replicate the Norwegian Sovereign Wealth Fund yourself using ETFs, since only Norwegians can normally access this fund. Everyone else has to do it this way. And first, we start with a 71% equity allocation, which is the actual stock ratio of the sovereign wealth fund, seen here on page 3. For this, we use the same index as the Norwegians. That's the FTSE Global All Cap Index, which is also the basis for the sovereign wealth fund's equity investments. The FTSE Global Index tracks global stocks. Unfortunately, the ETFs fund is not available in the EU in this form. It is traded in British pounds in the UK, but not in euros, which makes trading and currency exchange a bit expensive. A good alternative is therefore the Vanguard ESG Global All Cap ETF, which also filters according to ESG criteria. Some people like that, others not at all, but the Norwegian Sovereign Wealth Fund is known for placing a strong emphasis on ESG criteria. That's why we've included this ETF here. All names and of course, we've also listed the ISIN numbers of the ETFs for you below in the video description. After that, for the 26% that is invested in bonds, we use 2 ETFs. First, the Xtrackers Global Government Bond ETF, to represent government bonds from the developed world. Here you can see some details that you won't find in the fact sheet. As you can see, most of the money here goes to North America, followed by Europe, the Middle East and Africa, as well as some to the Asia-Pacific region. However, it is explicitly not invested in all countries nor in emerging markets, as can also be seen from the quality of the included bonds. In addition, there is the iShares Global Corporate Bond ETF to represent corporate bonds from around the world that are at least investment grade. 1.7% now goes into real estate. For this, we use the VanEck Vectors Global Real Estate ETF to invest in real estate globally through a single diversified ETF. And finally, for the renewable energy portion, we could use the iShares Global Clean Energy ETF. However, due to its historically very weak performance, I would choose an alternative like Ventus instead. This way, you can build the entire portfolio with just 4 to 5 ETFs. You can pretty much replicate the entire portfolio of the Norwegian Sovereign Wealth Fund yourself, and also quite cheaply, which is very important as well, allowing you to build a much better retirement plan for yourself than with any of our state systems, which are based on the redistribution from young to old. This way, your money can grow until you eventually want to live off the returns yourself. And I wish that other countries like Germany, Spain, Italy, and many others could learn something from the Norwegians or, in this example, the Swedes. Because historical returns here speak for themselves. It is worthwhile, and in the end, it relieves the burden on contributors and also provides for future generations, which is a good deal for everyone in the country. What is your opinion on the Norwegian Sovereign Wealth Fund, their investments and the returns from them? Let me know in the comments below. I'm looking forward to the exchange, and with that I wish you good returns, whether with or without the Norwegian Sovereign Wealth Fund in your portfolio. See you next time.